today, let's talk about a big shock that hit Indian stock markets. On Friday, investors lost more than rupees 6 lakh crore in just one single day. And as the Sensex crashed over 769 points and the Nifty slipped below the 25,050 mark. Now at first, everything looked fine. The market actually opened on a positive note. The Sensex opened higher at 82,335 points and even touched the day's high of 82,560. But very soon, heavy selling started and within hours, the entire mood of the market changed. The early gains were completely wiped out. And by the end of the day, markets closed sharply in the red. So what exactly happened? Why did the market fall so badly? And what were the main reasons behind this sudden crash? Let's understand everything. So hello, I'm Khadija and you're watching Lokmat Times. And now as we are moving ahead, do subscribe and press the bell icon for more updates. Now let's start from the beginning. The biggest reason behind this fall was continuous selling by foreign investors, also known as FIIs. On Thursday alone, foreign investors sold shares worth around 2,550 crore. And this was not just one day of selling, this was the 13th straight session of foreign selling in January. In fact, foreign investors have been net buyers only once this entire month. So when foreign investors keep pulling out money continuously, it creates pressure on the markets. Experts say that this trend has been continuing from last year, where foreign investors are selling and domestic investors are trying to balance it. But right now, the selling pressure is simply too strong. Market experts believe that foreign investors may not return in a big way unless corporate earnings improve significantly or the union budget announces strong market-friendly steps. The second major reason was the fall of the Indian rupee. On Friday, the rupee slipped to a fresh record low of around 91.77 against the US dollar. That's nearly a 0.2% fall in a single day. This happened mainly because of a strong dollar demand from importers and worries about capital outflows. Now, when the rupee weakens, it creates concerns about rising inflation and economic stability, and that makes investors nervous. A falling rupee also increases costs for imports, which is never good news for the market. All this added more pressure on already weak market sentiment. And third big reason was disappointing Q3 earning results, especially from heavyweight companies. Shares of the Interglobe Aviation, which operates Indigo, fell nearly 4% after the company reported a massive 78% fall in net profit for the December quarter. Similarly, pharma major Cipla also disappointed investors. Its shares dropped around 5% after reporting a 57% year-on-year fall in net profit. And these results raised serious concerns that the earning recovery across sectors is uneven and weaker than expected. When large companies report poor results, it directly impacts overall market confidence. And now another factor adding pressure was the rise in crude oil prices. Oil prices moved higher after renewed geopolitical tensions involving Iran. Brent crude climbed to around $64 per barrel, while US crude rose close to $60 per barrel. Now, higher crude prices are a big negative for India because we import most of our oil. When oil becomes expensive, it increases in trade deficit and inflation, both of which are bad signs for the economy. And whenever oil prices rise, markets usually react negatively, just like what we saw on Friday. And now finally, sharp selling in Adani Group stocks added to the market fall. Shares of Adani Green, Adani Enterprises, Adani Energy and Adani Ports fell as much as 11% in a single session. This came after reports that the US Securities and Exchange Commissions has sought court permissions to directly serve summons to Gautam Adani and Sagar Adani. This news triggered panic selling, leading to a massive drop in Adani stocks. Because of this sharp fall, the combined market value of the Adani Group fell by around 1.1 lakh crore in just one day, dragging the overall market even lower. So when you combine all these factors, relentless foreign selling, record low rupee, weak corporate earnings, rising crude prices and sharp fall in Adani stocks, the result was a heavy market crash. By the end of the sessions, investors had lost around 6.4 lakh crore and the total market capitalization of BSE listed companies dropped to nearly 452 lakh crore. This clearly shows how fragile market sentiment is right now and how quickly confidence can shake when multiple negative triggers come together. So that's what exactly happened in the markets today, and these were the main reason behind the sharp fall. Now, have you also invested in the market and felt today's loss? How did this crash impact you? Tell us in the comments below.